Hi, this is Daniel Haverkos with AFS. For those of you that know me, it's my privilege and honor to help organizations and specifically their employees to make wise financial decisions. Today we really want to make sure that you as an individual are making a wise decision when it comes to your student loan debts and the potential of consolidating those debts. So if you haven't checked that out in the last few years, there's really been a lot of new options and innovative and simple strategies that are out there to help not only consolidate but maybe reduce the payment period and the interest rate on those amounts that you owe. For those of you that don't know, by consolidating your loans, that simply means you're putting them all together and having maybe one single payment and ultimately potentially a reduced payment that you're making and a reduced interest rate. So a couple things to consider there. There are a lot more options when it comes to consolidating unsecured loans than there really ever were before. And so unsecured loans really are just anything that's not tied to an item, like a house or a car. So one thing to be aware of as you think about this is the interest rates that you have on those loans and the payment structure that you have. So there's some pros and some cons that you need to be aware of. The pros when it comes to consolidating your loans is that you may be able to reduce those overall interest rates by streamlining into one single loan. You also might be able to modify the payment period. So you could potentially stretch that payment out over a longer period of time and reduce the monthly payment that you owe. And lastly, you might be able to reduce the number of payees that you owe. So simplifying your overall budget so that you don't have to make multiple payments each month. You also need to be very careful that you don't want to miss a loan, a consolidated loan, even by a single day. Because now if you've got all of your loans into one single provider, the risk and the negative effect on your credit score is going to be even greater. So be careful there once you've consolidated your loans. And lastly, we would tell you that you really need to research the different lenders that are out there, because there are a lot of new private lenders that will give you money, but you need to make sure those are viable lenders and they're going to be around for a lot of years so that they can stay good on their promise to pay off your loan over time. It's really critical to ask yourself three main questions when it comes to your overall credit score and does it make sense to potentially refinance your loans. One is, what is your credit score? And are there any blemishes there that you can go in and maybe clean up to improve that score? If your score is over 700, there might be even more lenders that are available to you and potentially at even better interest rates than you've seen in the past. You also want to be able to show a proven pattern of paying your debts on time. So making sure that you don't miss a payment by even a day or two can hurt your credit score, but certainly anything over 30, 60, or 90 days will pretty dramatically hurt your score. The last thing you want to be aware of is your consistency in your income stream. Lenders are really looking to see that you've been making money on a consistent basis so that you can pay back what you're borrowing over the full time period that you borrowed it for. If you have any student loans that have interest rates with greater than 6%, we would encourage you to take a look at a website called credible.com. They'll give you some compare and contrast data to allow you to determine how your interest rate and your overall loan structure compares with other people your age that are making the same amount of money that you've made, maybe even that went to your same school. So again, if you are paying more interest than maybe you should be, Credible will point you to some opportunities to maybe refinance those loans with private lenders, as well as restructure the payments so that you might be able to fit better into your overall budget. In summary, consolidating your student loans may not make sense for everybody out there, but if you do have interest rates that are higher than 6%, we would encourage you to take a second look and make sure you're on track for what you're looking to accomplish in your financial life.